Over in the U.S., the Consumer Price Index for January rose more than expected as high shelter prices weighed on consumers, marking a 3.1% increase. This data has jolted the stock market against bets that the Fed would start trimming rates in May. Eun-jin reports.
The U.S. Bureau of Labor Statistics reported on Tuesday that the U.S. Consumer Price Index, a broad-based measure of the prices shoppers face for goods and services across the economy, increased 3.1% on year in January, which was above the market expectation of 2.9%. On month, inflation fell 0.3 percentage points from December's reading of 3.4%, which is much slower than expected. Excluding volatile food and energy prices, so-called core CPI accelerated 0.4% in January and was up 3.9% from a year ago, unchanged from December. Shelter prices contributed mainly to the increase, with the index rising 6% on year. Taking up about one-third of the CPI weighing, the index for shelter prices climbed 0.6% on the month. On a 12-month basis, shelter costs rose 6%. After closing at a new record high on Friday, the S&P 500 inched down 0.1% on Monday. And after the CPI inflation data was released, the S&P 500 fell sharply in Tuesday's stock market action, sliding a further 1.3%. The Dow Jones Industrial Average sank more than 520 points, or 1.4% on Tuesday, its worst one-day percentage decline since March 22, 2023. And the Nasdaq Composite fell 1.8%. Still, the big three indexes were trading higher on year. Fed officials expect inflation to recede back to their 2% annual target, largely because they expect shelter prices to decelerate through the year. But January's increase could be an obstacle for the central bank that's been looking to relax monetary policy, which is at its highest in more than 2 decades. Eun-jin, Arirang News.